Hi students, 12th Standard Accountancy, Chapter 5, Admission of the Partner, Illustration sum number 19. Let's read the question. Arun, Babu and Charles are partners sharing profit and losses equally. They admit Durai into the partnership for 1/4 share in future profit. The goodwill of the firm is valued at 36,000 and Durai brought cash for his share of goodwill. The existing partners withdraw half of the amount of their share of goodwill. Pause necessary journal entries into the assumption that the fluctuating capital method is followed. Okay. So this is the different situation. Let's explain the question. Arun, Babu and Charles. Three are old partners. There are three old partners. Though they share their profit and losses equally. So their old profit sharing ratio is not given in the question. The old partners share their profit and losses equally. Okay. They admit Durai into the partnership for 1/4 share. So Durai is the new partner. The Durai's profit sharing ratio is 1/4. Future profit sharing ratio is 1/4. The goodwill of the firm is valued at rupees 36,000. So the total goodwill of the firm is valued 36,000. Okay. Durai brought the cash for his share of goodwill. The total value of the goodwill of the firm is 36,000. Durai is a new partner whose future profit sharing ratio is 1/4. Durai brought cash for his share of profit as a goodwill. Okay, so the total value of the goodwill, Durai's contribution is 1/4. Okay, so we have to cancel 1/4 are 4, 9/4 are 36, 9 into 1 are 9,000 rupees. So Durai brought 9,000 rupees share of goodwill as a cash. Okay, then what is the journal entry? Durai brings the goodwill 9,000 rupees for cash in the name of cash. What is the journal entry? Cash comes into the business in the name of goodwill. So the journal entry is cash or bank account debtor to respective old partners capital account. So who are the respective old partners? Arun, Babu and Charles. So bank account debtor 9,000 rupees and Arun, that 9,000 rupees, how can we distribute to the old partners? The 9,000 rupees which is brought by the new partner in the name of goodwill. How can you distribute that 9,000 rupees to the old partners? They share their profit and losses equally. So here also we are going to share that 9,000 rupees to the three old partners equally. So 9,000 rupees divided by 3, you will get 3,000 rupees. Okay. 3 ones are 3,000. Okay. So each partners, the goodwill is transferred to the each partner's capital account 3,000, 3,000, 3,000 rupees. So whenever the new partners bring the goodwill, the journal entry is bank account debtor to respective old partner's capital account. Here Charles bring the goodwill as per his share of profit. What is his share of profit? 1/4. What is the total goodwill of the firm? 36,000. 36,000 divided by 1/4, 9,000 rupees. So Durai's new partner, Durai's share of goodwill is 9,000 rupees. That 9,000 rupees, three partners distributed equally. Okay, this is the first journal entry when the new partner bring the cash as a goodwill. Then the existing partners withdraw half of the amount of their share of goodwill. Okay, the existing partners withdraw the half of their share of goodwill. What is the journal entry? In reverse entry. First journal entry is bank account debtor to respective partners capital account. In reverse entry, respective partners capital account debtor to bank account. So who are the respective partners? Arun, Babu and Charles. So how can they take and withdraw their goodwill, share of goodwill? Half of the share of goodwill one day the existing partners withdraw. What is their half of the goodwill? Their goodwill is 3000. The half of the goodwill is 1500 rupees. Okay. So the existing three partners withdraw 1500 rupees respectively to bank account, added 1500, 1500, 1500, 4500 rupees. Okay. Do you have any doubt? Please comment it into the comment box. Thank you. Take care.